Hello my friends and welcome to this new episode of Money Talk. Today we're going to talk about Japan during the 1980s. Last time we talked about the dot-com bubble and we saw what happens when the entire sector of an economy bubbles, but today we're taking one step further. We're going to see what happens when an entire country bubbles. And that is precisely what happened in Japan during the 1980s. Japanese stocks and Japanese real estate had a huge bubble that bursted in 91. And that burst had severe consequences on the Japanese economy. Consequences that are still visible today. As we're talking about Japan and the 1980s, this video deserves a special opening. Before getting started, please hit the subscribe button down there to never miss a new video and activate the notification bell to increase your financial literacy every single week. The dot-com bubble was anecdotal more than anything else, and it didn't have that much of a big impact on the real economy. I mean, it didn't have a huge impact on average, everyday people. But the 1980s Japanese bubble was very different because it affected the lives of absolutely everybody in Japan. So we're talking about millions and millions of lives that have been affected by this bubble. In short, Japan had been growing incredibly fast since 1945. In the 80s, there was this famous bubble, and in 91, it bursted. And since then, 30 years later, the country has had almost no economic growth, and Japan still didn't recover from that famous bubble. But again, it would be very difficult to understand this bubble if we did not talk about the context in which it happened. So it is time to get in our time machine. In 1945, at the end of the Second World War, Japan was a country that was completely devastated. It was one of the losers of the Second World War. It had been the victim of very intense bombing. Its industry had been almost completely destroyed. And worst of all, it had been the victim of not one, but two nuclear bombs. The Americans knew they had to help out Japan. Otherwise, an impoverished and angry Japanese population could decide to go to war against the United States once again and launch kamikazes all over the place again. Or even worse, they could foster the spread of communism in Asia. As a result, the United States gave massive financial aid to Japan. And the Japanese government used all of that money very wisely. First, they rebuilt everything. Bridges, roads, etc. And then they passed a whole series of laws to promote and foster the industrialization of the country. And then the Korean War broke out. And it was a huge opportunity for the Japanese because they were delivering supplies, ammunition and logistics to the American troops in Korea. And in the 1950s, the Americans finally went away. They didn't occupy the Japanese territory anymore. And Japan used all this new industry to create a lot of new products and export them everywhere in the world. They were a huge pioneer of free trade. From that moment up until 1991, Japan grew almost exponentially. Its products were literally invading the planet, with huge companies such as Toshiba, Toyota, Nintendo and Sony that were dominating entire industries. And some aspects of the Japanese culture also invaded the planet. Everybody who's born in the 80s, the 90s or the early 2000s has been flooded with Japanese cartoons, Japanese mangas, Japanese video games, etc. Japan went from being this poor little island completely devastated by two nuclear bombs to become the second largest economy in the planet. It was even said that by 2000 the average Japanese was going to be richer than the average American. And Japan was also the king of innovation. They completely revolutionized the auto industry and they started teaching the Americans how to manufacture cars. So much so that some people in the US completely dropped their good old Ford for a Japanese brand, and all the electronic equipment was created and made in Japan. Best of all, they had created the fastest train on the planet, the bullet train. And in Japan, unemployment? Pfft, what? Never heard about this. What is that? Everybody thought that Japan was the future of the planet. And even myself, when I was a kid in the late 90s or the early 2000s, there were still some people saying this. Hey kid, forget about English. You will see, when you will be 20 years old, everybody will be speaking Japanese. I think you got the point. Everybody thought in the 70s and the 80s that Japan was going to be the future. But right now, Japan is only the third economy in the planet. It is not richer than the US. And all those Japanese products, we don't see as many. And mangas, Japanese cartoons have almost completely disappeared. So what happened? Well, the problem is, Japanese products in the US had almost too much success. And in the 80s, for the almost first time in their history, the United States had a trade deficit. It means that there were much more products entering into the United States than products being exported from the United States. On the other hand, Japan had a huge trade surplus, especially vis-à-vis of the United States. In other words, Japan was lending money to the United States, and the United States was having a growing debt towards Japan. And the Americans didn't like that very much. But listen, most people who had fought World War II against the Japanese were still alive at that moment, and the United States was the winner of the war, and right now the United States had a debt to pay to Japan? It made no sense to them. So you're telling me that we won the war, I went to Okinawa to beat the Japanese, and now we're buying all their stuff, they buy none of our stuff, and we owe them money? That is not normal, that is not fair. What is Ronald Reagan waiting for? As a result, the United States and Japan started doing some negotiations. And those negotiations led to the Plaza Accord. And that accord basically stipulated that the Japanese had to make their currency, the Japanese yen, much stronger compared to the US dollar. And that was the beginning of big problems for Japan. You see, if Japan made its currency stronger, that is, more expensive compared to other currencies such as the US dollar, the Swiss franc, the euro. Well, the euro didn't exist back then, but whatever. If the currency is stronger, it means that Japanese products in foreign countries will be more expensive. That is, they will be less competitive. And as a result, Japan is going to sell less products in foreign countries. And as a result, Japanese GDP is going to shrink, is going to go down. The Bank of Japan, that is, the Japanese central bank, saw this unavoidable recession coming. And as a result, they decreased the interest rate. Whenever there is a recession, central banks tend to decrease the interest rate to boost the economy and maybe offset this recession. And I know that my viewers are very clever people, and I'm sure you got it. Low interest rates, everybody was saying that Japan was the next success story. You got it. It was at that moment that the bubble started, right after the Plaza Accord. So let's see how this bubble unfolded, shall we? Well, the first stage of the bubble, the displacement stage, that is the moment where institutional, usually professional investors spot the good opportunity. In our case, it started somewhere around 1982 up until 1985, when the Plaza Accord were made. And all those institutional, clever and professional investors were interested specifically about real estate and stocks. So to assess the cheapness or expensiveness of stocks and real estate, we will need some indices. First, we have the ULI, or Urban Land Index. This will tell you how expensive or how cheap was real estate in Japan at that moment. And then for stocks, we have the Nikkei 225, the very famous index. That is basically the 225 largest companies in Japan. And with that index, we'll be able to see how they performed. Between 82 and 85, the Urban Land Index went from 100 to 120, so a 20% appreciation. And the Nikkei 225 went from something around 7,500 to 12,000 points. That's almost 50% appreciation. That's a lot, but it's still reasonable. That's why it is a displacement phase. And mostly there, we had professional investors. It was not a full-blown bubble, not yet. And then we had the boom phase from 85 to 86. We have to say it was pretty short-lived. In our case in Japan, we went from displacement to euphoria almost instantly. So this boom phase lasted a couple of months maybe. But still, the prices went up pretty sharply. The news started being very interested, not only the local news in Japan, but also in the US. And a lot of average Joes, even Japanese or Americans, were starting to invest in Japanese real estate or in Japanese stocks. And remember, at the same time, during the boom phase also happened the Plaza Accords. And as a result, they lowered the interest rates. So it was very cheap to borrow money at the bank to buy some more real estate. And there we had a very interesting virtuous cycle that appeared, or a positive feedback loop. And that feedback loop happened. Homeowners were richer. Why? Because the price of their houses had just gone up and interest rates were very low. So they went to the bank, borrowed a lot of money very cheaply to buy some more real estate. And as a result, the demand for real estate increased. And as a result, the price of real estate increased also, making the homeowners even richer. So they went again to the bank to borrow more money, to buy some more real estate, and so on and so forth. That is the feedback loop. There you had a very simple formula to get richer, richer, and richer without doing anything. But there was a trap, because there is a very strong assumption here. For that formula to work, the price of real estate has to go up all the time and never go down. If the price of real estate goes down just a little bit for whatever reason, or if interest rates go up, this whole system, this whole formula collapses. But nobody was thinking about that at that moment. Everybody was saying, well, you know what? The price of real estate will go up all the time, no matter what. And then came the very sweet euphoria stage. From 1986 up until 1989, the price of real estate skyrocketed, just exactly like the Nikkei 225. It just skyrocketed. In Tokyo, for example, the price of real estate was just crazy, the most expensive on the planet. To give you an idea about the expensiveness of the Tokyo real estate, 1 square meter of residential land in Tokyo was worth $6,000 in the late 80s. At the same moment, in New York, it was approximately $1,600. It was $900 in London and $2,400 in Paris. But here I am talking about residential land. If you wanted to have a nice office somewhere in Tokyo, it would be a very modest $45,000 per square meter. And in the best neighborhood of Tokyo, in Ginza district, the price of the square meter of land was $219,000. That means that what you see here, maybe 4 meter squares, if we were in Ginza in the late 80s, it would be worth more than $800,000. In the meantime, companies were speculating with stocks because they were facing a problem. They were making less money because of the reduced amount of exports. And they said, hey, how can we offset? How can we compensate this loss? And at that moment, the answer was obvious. By buying stocks, they were only going up. What could go wrong? And that created yet another positive feedback loop. Because companies were buying stocks, the demand of stocks went up. And as a result, the price of stocks went up also. And that made that those companies who had bought stocks were making more money. They made a higher net income, which increased even more the demand for stocks, which increased their net income, and so on and so forth. At that moment, Japanese stocks represented half of the total valuation of all the stocks on the planet. It was also at that moment where we saw all those rich Japanese tourists everywhere in Europe with their little hat, taking pictures of everything with their Japanese cameras. And in Japan, everybody was partying like crazy. A lot of new restaurants had just opened, and the consumption of luxury goods such as champagne, caviar, and Mercedes-Benz skyrocketed. It was also at that moment where we saw the huge popularity of Japanese media, as we talked about earlier. From 1986 up until 1989, in just 3 short years, the urban land index went from 140 to 280 points. So that means that in average, in Japan, the price of real estate doubled. And the Nikkei went from 13,000 points up until 30,000 points in 3 years. And I know, you're waiting for it. The Bank of Japan knew they had a huge problem because they had this gigantic bubble, and they knew they had to cool it off to temper it, because if they let it burst suddenly, it would destroy the economy. Let me show you with this balloon what I'm talking about. That, ladies and gentlemen, is the Japanese bubble. And the Bank of Japan wanted to do this. Slowly cool it off. And what did they do? They slowly increased the interest rate to slowly cool off the bubble. And it was also at that moment that a few very smart investors decided to sell everything because they knew it was the end of the bubble. But for the majority of the people, they kept going. They were still in euphoria. At the same moment, the urban land index kept going and the Nikkei 225 went from 30,000 to 39,000. It was almost its peak. Remember when I told you that the Bank of Japan wanted to slowly cool off the bubble to make it shrink very slowly and progressively? Well, that failed. It bursted. To take back the example of the balloon, instead of slowly deflating, that happened. And that is what was left of the Japanese economy. So I think you got it. In 1989, everything collapsed. The stock market collapsed and the real estate market completely collapsed. The Nikkei completely collapsed. It had peaked in 1989 at 39,000 points. By 1990, it had lost half of its value. And in 2003, it bottomed at 7,000 points, its lowest level since 1982. And we have to say, the Nikkei never completely recovered since then, even 30 years later. The urban land index kept going for a little longer, and it finally peaked in 1991 at 360 points. It had tripled in 7 years, but it also took it only 7 years to completely lose all those gains and come back to its level of 1982. When the dot-com bubble bursted, investors were the ones to lose money, and some people lost their job because they were working in dot-com companies. But the general population was not really affected. Here, in Japan, it was very different. The consequences were much more severe and everybody was affected. From 1990, Japan entered into what is called today the last decade, a decade with absolutely no economic growth and deflation. Deflation is the opposite of inflation. Deflation is when the prices of everything goes down. And believe me, deflation is much, much worse than inflation. And even during the 2000 decade and the 2010 decade, there was very little growth. So we can say that Japan lost 30 years. The Japanese government tried many things to restart the economy. They spent massive amounts of money, they also printed massive amounts of money, but none of that really worked. Japan accumulated a massive amount of debt, and today it is the most in-debt country in the world, with more than 200% of its GDP worth of debt. So there you see how a bubble that lasted only a few years had consequences for more than 3 decades. What is the conclusion to all of this? Well, learn from history. Do not fall in the same trap. Recognize and avoid bubbles. That will be very good for your society and for your wallet. That's it for this video about the Japanese asset bubble. As always, I hope you enjoyed this video and learned something from it. I personally had a lot of fun to do it. And if there is a topic you want me to cover in a future video, you can put it in the comment section below or send an email to the address that is in the description. I will see you very soon for a next video, and in the meantime, take care.